Good morning. My name is Behl. Welcome to Behl's Business Broadcasting. Today, we're going to talk about the top economic things that you need to know in order for your business to grow over the next few months, years, and particularly the short-term volatility that we are observing with the market forces right now. As I always say, no man is an island unto himself. Similarly, no business is an island unto himself. We're going to observe the economic forces that drive the success or failure of your business, of your advertising campaigns, of your scaling efforts, so on and so forth. In the second section, we'll talk about the top mistakes I've made throughout my journey as an entrepreneur over the last couple of decades, and I've made some big mistakes. So I'll talk about those and how they point to a singular theme and how it ties into today's top macro news as well as long-term trends that we are constantly observing. So let's get started with today's news, the first section of today's broadcast. Here's the first big piece of news that I want to talk about, and I keep saying something to the line of what is politically always inevitable. So JP Morgan is warning that US may tackle debt via inflation. What a surprise. Are we surprised? Well, if you are a regular listener, you're not surprised. You always knew that. And this is just something that we constantly talk about. Inflation isn't coming. It's always there. It's really the only door that doesn't require political suicide for most politicians, which is why you're always going to have this. How would you take debt away? Well, you inflate away, you borrow from the future. This is a political inevitability. I'm sorry, it's not uncertainty, it's inevitability. This is what they always do. Like I said in my previous streams, one thing that you can be absolutely sure about is if there's a fiat currency, it's eventually going to zero. No matter how big it is, no matter how much prosperity or guns it is backed by, how many guns it's backed by, eventually it will go down to zero. And we are seeing that play out once again, yet again, with the modern currencies. And I'm not just singling out the dollar here. Whether it's the dollar or the pound or the euro or any other currency right now in the world, Japanese yen, right? That is actually preceding everyone else in terms of currency debasement. And we are always seeing inflation. Inflation is always going to be there. So, you know, this report on Perplexity actually says that. Let's read it out loud. JP Morgan issued a stark warning this week that the United States may address its $38 trillion debt by tolerating higher inflation and eroding Federal Reserve independence rather than pursuing politically unpopular spending cuts or tax increases. So they're describing a scenario of financial repression in which policymakers deliberately allow stronger growth and higher inflation to reduce debt burden over time. Well, debt burden's not going away. You cannot cut away at the debt burden or get rid of the debt burden by just printing more money. Inflation is essentially money printing, no matter how you explain it. It's basically just a way of rearranging things so that over time things get more expensive. And why does that happen? Let's take an example. Let's say there are 10 players inside a room playing a game, and there are 10 apples, which are the rewards, and every one of the players has a token, a plastic token, a currency of the realm, so to speak, within that room. Well, right now, as an observer, you can say that one token, the currency of the realm, is equivalent to one apple in value. Now, let's say I'm the director of the game and I have the ability to sneak into the room, but not with one token in my pocket, but with 10 tokens in my pocket. Now, all of a sudden, there are 20 tokens in the room. And every single token is worth half an apple, right? And so all of a sudden, every single person in the room has lost essentially half their wealth. They now only have half an apple, when previously, before I brought in that printed money, they had access to a full apple. And so that's what happens, and that is the political solution. That is the political inevitability. Because what else is a government going to do? Are they going to ask people to cut spending? Are they going to cut spending for themselves? Are they going to ask the various branches of government to cut spending? I distinctly remember decades ago now, when Obama came into office, he went line by line on every single expense, and he managed to cut what, $30 million. $30 million. That's like 0.0001%. Yeah, 0.001% or less of the federal spending for that year. And it was hilarious because he wasted so much time doing that, but that's all he did. He wasted time just showboating how much he was cutting spending. But government spending never goes down. Prices are also a one-way street. I keep saying that in every stream. Prices go up and they never fall back down. That would require negative inflation or deflation, which nobody apparently wants. And so prices, even if they are high and inflation comes down, what happens is prices don't go up quite as fast, but they're still going up. They are still going up. Okay, so that's the inevitability right there. Let's look at the next piece of news right there. Bitcoin falls sharply from peak as investor sentiment wavers. Now, just a couple of months ago, or even less than that, more recent than that, Bitcoin made all-time high at $126,000. Right? Today, it's at around, well, what's it around? $88,000 right now, but it fell down to $80,000 just a couple of days ago over the weekend. So nobody has a crystal ball, like I always say. Especially not the FOMC clowns. But here's the thing, short-term volatility is also almost inevitable. If you are afraid about short-term volatility, your time frames are just not aligned with the way the world works. Look, the world works the way it works, not the way you want it to. And if you can position yourself, your portfolio, your business to take advantage of everything, or you can give back your gains to the market. Short term, nobody knows what's going to happen. Nobody has a crystal ball. And that is what we are seeing here. Over the long term, I'm very bullish on Bitcoin as of right now. Things can always change, and I'm a permanently agnostic person. I don't believe in one thing over the other. I just believe that long term human technological capital and human resources, with respect to the ingenuity, with respect to the things that we are able to do, that just continues to go up. That's what I'm confident about. How that manifests itself in various assets remains to be seen. But for now, I see no long-term headwinds for Bitcoin, even as though short-term institutions are withdrawing from MicroStrategy stock or from Bitcoin ETFs, as we are seeing right now. And retail, as usual, they have no idea what they're talking about. They are just clowns playing the PvP game and getting massacred. In fact, we'll talk about how they get massacred, both in the rest of the news outlines that we have, news stories that we have today, as well as through some of the mistakes that I've made that I'm going to discuss in the next section today. So let's keep going here. Now, Besant is saying Trump tariff checks may have income limits. Okay, well, that doesn't matter. What matters is every political fix, like I keep saying, is all about money printing. Money printer goes brrrr. We keep talking about that every single stream. That's the inevitable political solution. The way, shape, or form it takes keeps changing. But the solution they have to rising unemployment, or your customers, maybe even you, feeling that tightness of cash and credit right now. The solution to all that is not austerity. Nobody wants financial discipline. Nobody wants financial austerity, least of all the people running the governments all over the world. It's not just the US government or British government or this government or that government. It's literally every single policymaker. They don't want negative inflation. and they really don't want people to be unhappy about it, which the gubernatorial elections last month showed us. People were unhappy, and then the political pendulum just keeps swinging, and that really does not reflect changes in policies. That reflects more a change or a demonstration of dissatisfaction with the current administration. And no politician wants that. No politician in power wants that. Now, if you're not in power, then you definitely want to hammer home that people, you're not comfortable. Things are not going so well economically. However, long term, the political solution is always to print more money. And Trump tariff checks are exactly a representation or a manifestation of the same idea. In fact, they are looking at a $300 billion expense in the form of these checks, while they've really only collected under $100 billion in tariffs. So think about that disparity. All that rigmarole to collect money only to ship it out, pretty much like Ben Bernanke, the helicopter guy, who said, I would rain money down from no, I'm paraphrasing here, but he said, I would rain money down from a helicopter instead of letting the economy go into a recession, or instead of letting deflation hit the markets or something like that. Essentially, they just want to keep the party going. Why? Because printing money is borrowing from the future, and they don't care if they're borrowing from the future. They don't, because it's not their problem to solve, it's the next guy's problem to solve. The next Treasury Secretary, the next president, the next administration, the next leader of the Federal Reserve, they're the ones who have to deal with the consequences, not the guys in power today. And that's true now, that was true in the past, that will also be true of the next administration and the next group of people leading us anywhere in the world. That's always going to be true. So the solution is, well, money printer goes brr. Okay, now we have this guy, Arthur Hayes. He's the founder of BitMEX, co-founder of BitMEX. He's predicting Bitcoin had a support at $80,000. But that's not the big news that I want you to focus on. The focus here should be that Fed is ending QT, quantitative tightening, which means we are going to now have QE sooner or later. And that's just more evidence of the inevitability, isn't it? It's over the short term, the only thing that really matters for any sort of prices, for especially volatile assets like Bitcoin, is just QT versus QE. So let's look at what's been going on. So this is WALCL, or the federal balance sheet. And you're going to notice, I bring this chart up often actually, but you're going to notice since April or May of 2022, things have been going down, except this brief spike in March of 2023. Things have been going down. The federal balance sheet has been going down, which indicates quantitative tightening. And this tightening has actually been going on for a long period of time. The other thing you're going to note is that the slope is declining. What that means is we are approaching a minima where things tend to turn around. Looks like a bottom is forming right here, just by looking at the curve, right? You're also going to notice long-term WALCL goes up. That's just quantitative easing. You're also going to notice how that correlates with, let's say, crypto alt seasons or gravy trains or people printing stupid amounts of money just by getting lucky, just by investing in fart coin. Well, all those things happen when money printer goes brr. Now, whether that happens through quantitative easing or through stimulus checks, it's all the same thing altogether. And what you're looking at is that now, this was just a rumor a month ago, the Trump checks. Now this is beginning to become a solid idea. It's being discussed, and sooner or later, if this doesn't happen, something else will happen. If the quantitative easing doesn't happen now, it's eventually going to happen. I mean, can you believe that the federal balance sheet will continue to go down forever? That's now not how things work. That's not how political solutions work. Which administration wants people to have high costs on everything, declining wages, high unemployment, and just a credit squeeze all around? Now that'd be a popular government, wouldn't be, wouldn't it? So every administration, whether it's right-leaning, left-leaning, or anything else, right? They all eventually want the same thing. They want to be congratulated for what a great economy you've got going there. And the way that happens is if people in general seem to have a blast by having more money to spend, whether it's cash or credit, if they have more money to spend and they have a higher discretionary income, so their groceries, their mortgages, their interest, their insurances, their taxes are paid, and then they have something left over to buy that thing that they really wanted to buy, whether that's a pair of shoes, whether that's an overpriced holiday somewhere in the world, whether it's whatever it is that they enjoy, right? People enjoy different things. If they have money left over for doing that, if a large number of people have leftover discretionary income for doing things that they like to do, then governments are happy. Which means if you're a business owner, this means something for you. You're waiting for the right time to bring more products into the market. Now is the time to get your ducks lined up. Now is the time to make sure that your products are going to be literally ready to go, just to decimate the market when you're ready. When the market's ready, and quantitative easing is coming sooner or later, we know that as a matter of fact, it's going to be inevitable. Okay, now let's look. Okay, Michael Burry, the guy from 2008 housing crisis. He's also the star of this movie. I think it was called, I forget the name. What's the name of this movie? I don't remember the name of this movie, but you've probably most likely seen it. Anyway, so Michael Burry, he's predicted 29 of the last 2 recessions correctly. He's a permabull. Guys who are permabulls are often right once every few decades, because eventually, we have the cyclical thing going, and eventually we're going to have a recession sooner or later, and eventually this guy is going to make a lot of money and probably get another movie made about him. But you have to understand, he's been wrong about having this prediction, his prediction of a crash, upcoming crash. Look, even through quantitative tightening over the last few years, we've seen the quantitative tightening going on. SPX continued to make new highs. AI sector has boomed and blossomed and just ballooned so much that new highs have become inevitable. We talked about Nvidia achieving a $5 trillion market cap last month. $5 trillion. One company started out as a gaming card manufacturer with, applications in architecture and stuff like that. Today, their big application is AI, which is driving the shortage of cars. We talked about that in our last stream with our guest, Mr. Tom Binger. And so, Michael Burry, he has launched a blog, first of all. So this is something to take away if you're a business owner. Well, everyone wants to make that recurring income, right? His blog is called Cassandra Unchained at $39 per month. Maybe he won't make money with the predictions about a crash in the short term, but he'll definitely make money from his subscribers, won't he? And he's drawing parallels between today's AI frenzy and the dot-com bubble from the 1990s. Here's the thing, though. These bubbles can go on expanding a lot longer than you think. You can never be sure if it's an actual bubble. For a long time, Amazon was not profitable as a company. Look at them today. For a long time, people thought internet would be a bubble. And we had a dot-com bubble, but do we have successful online-based companies today? Look at the top 10 companies. How many of those companies are online, internet-based? Pretty much everything. So all these guys who have this take on what's going to happen over the short term, well, first of all, they don't have a crystal ball any more than you do. Second of all, they may have insider knowledge, but even insiders don't know what's going to happen over the short term. Nobody knows what's going to happen over the short term. Otherwise, you wouldn't have volatility. Volatility is basically people disagreeing with each other. Someone sold Bitcoin at $120,000. You know why? They thought it wouldn't go up. It may actually crash. Someone else bought it from them, though, because they thought this might go up to 160, 200, 250, even $1 million. Long term, this person might be right. Short term, they have been wrong. Nobody knows what's going to happen over the short term. You can really only position yourself to take advantage of the inevitability. What's inevitable? Over the long term, hard assets tend to go up. That's what you know. Over the long term, inflation is virtually guaranteed. Over the long term, every political solution is going to be get more money into the hands of people. Can you position your business for that? Yes, you can. How do you do that? That's what this stream is all about. So let's keep going. Okay, so Meta, they buried research showing Instagram, Facebook harm mental health. Look, all these big companies have big slogans. Google used to, I think, have the slogan that said, do no evil or something like that, right? But at the end of the day, everyone is in it for themselves, aren't they? Whether it's you, whether it's a large company, whether it's your company, whether it's a competitor, whether it's a country, whether it's a government, whether it's your customers, everyone is in it for themselves. Everyone's looking out for number one. So here's the big shocker. $1 trillion company acts in self-interest. And they lied. They misrepresented data. That happens every single day. If you trust data coming from, or slogans, marketing slogans, worse, right? Coming from big giant corporations or small companies, or from people in your personal life too. This is one of the big things I did wrong, and one of the big mistakes I made and learned through painstaking sort of just punishments in life, right? If you trust people to not look out for themselves or to follow a dogmatic principle, that's just not going to happen. So here's the lesson. Stop telling your customers to, or stop expecting your customers to align with your interests. Instead, align your products and services to be in your customer's self-interest. Let me rephrase that. If you're blaming the market, if you're blaming your customers, then really you've got no one else to blame but yourself. If your products, if your offers, if your services just aligned naturally with your customer's best self-interest, which is what they are looking out for. They're looking out for themselves. They don't care about you. They don't care about your business. They don't care whether you are in business, whether you make money, whether you make a profit or not. They may appear to be loyal fans. They may even bring in more customers through referral business for you, but that does not mean they're not looking out for themselves. You know why customers give you referrals? Do you know why you have referral business at all if you have it? Because it makes them look good. It elevates their status with the friend that they're recommending to your business, or they're recommending your business to. They want to have a higher status, to have a higher quality of life. They want to have all of that. They don't care about you. They don't care about anyone else. That's the cold hard truth. They care more about their friends, but they care even more about their reputation with their friends. And if you're not getting any referral business, this is the problem. They don't trust that their friends are going to be able to enjoy your products and services. If they actually believe that your products and services are going to be enjoyable to their friends, and it's going to get their friends to say thank you to them, and if it's going to elevate their status for having recommended you to them, then they would already be doing it. If they believed your products and services elevate their status, take away their pain, give them comfort, give them luxury, fulfill their innate needs and demands or desires, fulfill needs and desires that they don't even want to express, well, if you did all that or any of that, any combination of that, they would be buying from you, wouldn't they? So here's the game that is being played right now. You need to find angles and hooks, and you need to optimize your products and services, and also offers. Offers are the presentation of these products and services so that they become appealing to your customers' self-interest. And do it before quantitative easing starts or these checks arrive. Because if these checks arrive and you're not ready, well, your competitors are gonna be. I'm gonna be. Okay, let's keep going. Trump family has lost $1 billion. $1 billion as crypto markets tumble. HODL, 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 HODL. That's a religion. It's not a strategy. HODL is a religion, it's not a strategy, especially in crypto, but everywhere. How's IBM stock doing today? Bro, if you're HODLing anything out of principle, you are literally betting against yourself. If you're HODLing anything, you're the patsy on that poker table that Warren Buffett talks about. He says, if you don't know who the patsy is on the poker table, then it's you. If you're HODLing, you're that patsy. No matter what it is, when it trends down, which short term, even hard assets like Bitcoin and SPX and real estate and gold can trend down. Gold went down from 2011 to 2016, then went back up to 2011 levels by 2021. So 10 years, no growth. It actually went down and went back up to the same level. Now it's tripled. But over the short term, anything can happen. And if you are HODLing on to altcoins right now, I don't have to tell you how much you're losing. Even if you're the president's kids, you cannot fight the markets and you cannot fight the tide. You could have the best boat in the world. Best boat in the world is not going to save you from crashing against the ground if you're in shallow waters and the tide's going down. It doesn't matter who you are. Market does not care who you are. Bitcoin dumps 15%, 30%. Happens within weeks, 2 weeks. That's all it takes. That's Bitcoin. Altcoins can dump 99% or more. And I see all these cultists for various altcoin scams, right? You have all these cultists and they're all about, hey, I'm going to HODL this because I believe in the technology. Wow. Bro, you're a genius. You saw it coming. Everyone wants to get in on the ground floor of NVIDIA, right? Everyone wants to get into NVIDIA when it was 16 cents. Here's the thing. Nobody can. You cannot predict what will happen in the future. What you can predict is human ingenuity will ensure that sooner or later, you're going to have a company that performs so well, so enormously well, that it beats SPX for a while. Eventually, on a long enough period of time, no matter what the company is, it tends to go to zero versus SPX. And if you don't believe me, look at the giants from 1960s, from 1950s, from 1940s, from 1970s, 80s, 90s, even 2000s. Several giants are out. They're not even in top 500 anymore. Many of them are just bankrupt, gone forever. The companies that are on the top today are not necessarily always going to be on the top. That's just inevitable. Okay, so Trump media has taken a huge hit, and if HODL is your strategy, you really don't have any strategy whatsoever. Mortgage rates hold near 6.25%, 6.24% despite Fed cuts. Translation? You want me to translate that for you? Well, what that means is in the next leg, when we have quantitative easing, when money printer goes on, real estate rips for people who have dry powder. Right now, we're in sort of a glut. No one's calling it that. I've been. In my previous streams, you can go look them up. I've been calling real estate as having a glut. Why? Well, you have, on the one hand, sellers who are unwilling to go down on the price unless they're forced to, unless they're desperate to. Why? Because they have locked in prices that were generational gifts. They've locked in at 2.5%, 3%, 3.5%. Now, if they sell and buy something else, their rate is going to be 6.24%, and they know it. So they're in no rush to sell. Unless they are absolutely in a rush to sell, they have to sell it in order to move, in order to have a job, in which case you're seeing all these price cuts on Zillow. I go to Zillow very frequently, and not just for my area, but for every area, right? And you have enormous inventory buildup. In fact, we had this news item a few streams ago where we talked about how real estate inventory has built up to 10-year highs. So we have so much inventory, but the buyers are not buying until they're desperate. Why? Well, it's really not that hard to do the math. The wages are stagnating. Okay? The unemployment rates are high. AI is killing jobs, and it will continue to do so forever. We have AI now. It's going to get better at coding, At art, we've talked about how AI is getting better. At art, the things that you never thought, creative aspects, creative avenues that human beings could be replaced in the fields of. Medical. You said coding, right? All the big money makers, all the big job creators are adapting AI, are getting AI involved in their business right now. It's happening in real time. And so even though we've had 2 Federal Reserve rate cuts this fall, a 1/4 percentage point reduction in September and then another in October, market widely anticipated those cuts would translate into lower borrowing costs for home buyers, but that has not happened. People have less money, so they can afford a smaller house. And unless they're desperate, they're not going to buy. And rates also vary by the loan type. But at the end of the day, rates are still too high and we have a glut right now. What that means is if you don't have dry powder right now, if you're in alts or stocks that are going down, you're doing yourself, your portfolio, a generational or at least a multi-decade disservice right now. You're making the mistake that I made, which I'm going to talk about in the next section. Okay, final piece of news today. So UBS analysts predicts years more of China home price declines. You know why that is happening? Because there's not enough demand for all the inventory they've got. They've got so many huge cities in China that are now ghost cities. We talked about that last time in the previous stream. Why is that happening? Well, demographic decline. Demographics are destiny. I talked about why I don't like real estate. I don't like real estate because, well, population curves are flattening or declining worldwide. Who's going to live in all these properties? Who's going to have an office in all these properties when you don't even have people to fill them up with? What happens when you have too much supply of a product, but not enough demand or requirement for that product? Prices go down. It's economics 101. Housing is a commodity. Unless you're in ultra luxury space, even there, housing is based on comparables, right? Comparables from around the neighborhood. Really, that's the only metric for appraisal. If you have so much inventory that you cannot liquidate it, what happens to it? Well, inverted population pyramids. Real estate only works with population growth. And even though it's a hard asset and you cannot print land, well, you can cut down forests and you can build or farm and convert that or rezone that farmland into or forest land into residential spaces. And we've seen that happen over the decades. Now there's just so much inventory, but not enough people are taking birth. You know, we don't have enough kids being produced today to live in those residences and to office in those offices. So you have commercial real estate that is just falling down a cliff. Bro, have you seen 80% crashes outside of altcoins anywhere? Outside of commercial real estate. Right? So that brings me to the conclusion of this section. What this macro environment does is confirm the hypotheses that we've always laid out for you. First, always invest in hard assets, not in fiat. Fiat is always going to go to zero. Eventually, it always tends to zero. Think about how much more you could have bought with $1,000 just 10 years ago compared to today. Especially other hard assets. How much gold could you have bought for $1,000? Probably an ounce, right? Maybe a little bit less. Today, way less than an ounce. Same thing with property. Even though I'm not even bullish on property, we know property has gone up to insane levels. And I can tell you it's going to continue to go up to insane levels. Not because of utility, which is a function of demographics or demography, but because of inflation. Inflation is inevitable. What that means is when quantitative easing cycle happens, when people have money to spend, you better be positioned as your business, as a business owner, with products and services that people are going to enjoy using and recommending to other people. And the way you do that is through testing hypotheses. We talked about that in one of our previous streams. We'll continue to talk about that. It's a more business specific problem to address. The way you do that is by testing hypotheses. And we'll talk about the right way and the wrong way to do that in our next segment today. What else do we know? Nobody has a short-term crystal ball. Even hard assets like Bitcoin or real estate or gold or or SPX, they can go down. Over the short term, they can, and they do, and they're doing it right now. What else do we know? Alts, all altcoins, even Ethereum and Solana, the best ones, eventually tend to go to zero with respect to Bitcoin. You want to see the graph on that, right? We've done Ethereum and Solana. Let's do something else. Let's do Litecoin. Anybody remember that one? Litecoin? They used to have Litecoin. Do they still have it? Litecoin. Oh yeah, they do have it. Spot. Let's look at the Litecoin curve. And let's look at the weekly on that. Oh, well, it's not doing so hot even against US dollars, so that's not a great example. Let's do something else. Let's do Solana. Let's do Solana again, because I don't want to endorse any one particular altcoin, but you can run this analysis for your own altcoins, whatever you like, okay? Solana, done really well against the US dollar, right? Went up to $254 in 2022, went up to $300 here. It's doing all right. Now let's compare it to Bitcoin price, okay? And just because Solana is so cheap compared to Bitcoin, I'm going to compare not 1 but 1,000 Solana to Bitcoin. So that's the curve right there. And it's a clear tendency to go towards zero. Do you see that? It peaked out at 4.53. So you could basically trade 1,000 Solana for 4.5 Bitcoin. Then peaked out at 4.15. Then did a smaller peak at 3. Another peak right here at 3, and this time, this alt season, when it did an explosive run from $7 all the way to $300 almost, compared to Bitcoin, it only ran up to 2. What happens next time? Well, it does another peak right here, and then here, and then here, and eventually tends to 0. Same thing happens to all companies over a long enough period of time against SPX. That's what we know for sure. Even NVIDIA. Eventually, something else is going to take that crown from NVIDIA, Microsoft, Netflix, Google, Amazon, whatever. Something else is going to come along, make all our lives better, and also replace the top contenders of today. And the top contenders of today, which are absolutely mogging SPX today, will eventually tend to 0 versus SPX. And even SPX, short term, nobody knows what's going to happen. It might actually crash a little bit. SPX doesn't crash that much, 10%, 20%, 30% is full on panic mode, right? Global catastrophe, global recession levels. So eventually, everything crashes to 0 versus SPX or Bitcoin and crypto right now. And those are your only inflation. I really just like SPX and Bitcoin. Why? They're liquid. You can move $100 million worth of holdings like that. You don't feel so good about the market, no matter what your indicators are. We're not talking about trading strategy today. No matter what your indicators are, if you feel like you want to get out of the market, you have $100 million worth of product, you can move it like that without paying a whole lot of fee or having any slippage in the process. At $100 million, you're really just a very small player in both those markets, especially SPX, but also Bitcoin. People have been dumping billions of dollars worth of Bitcoin daily. People who have had holdings since 2010, 2011 levels, right? They do billions of dollars of dumpage, barely moving the price down by 1% or even 0.1%. What about real estate? Well, if you have a $100 million property, commercial, residential, multi-unit, or a luxury, super high-end property, good luck finding a buyer for it tomorrow, especially if the market's declining. Especially if the long-term prospect of having more people to fill in those doors is also declining at the same time. Good luck with that. Gold, how much of it can you really even keep without becoming a target? Before you become a target. And if you really just want to keep a gold ETF, well, good for you. But now, you're not as sovereign as you think you are, if that matters to you. Even if you didn't, gold just really keeps up with inflation. It barely keeps up with inflation. In fact, I saw a study where about 25 ounces of gold got you a single family house in America in 1925 or something like that. I'll have to look that one up. I'll try to do that in the next stream. But I'm paraphrasing, and this, you can correct me if I'm wrong about the absolute numbers there. But the idea remains. Even today, same 25 ounces of gold. Was it 25 ounces? Was it more? I don't know how much it was. I don't know the exact quantity. But the same quantity gets you a house today. Maybe it was 100 ounces. Yeah, probably 100 ounces. 100 ounces of gold used to get you a house in 1925. 100 ounces of gold probably gets you a house in, technically does get you a house, an average house in 2025. So gold really is a hedge against inflation. Real estate peaked when demographics were peaking, and now it's declining in absolute terms. It absolutely is. In dollar terms, it's probably going up, and it will continue to probably go up for a while. In absolute terms, probably not. And if you're a business owner and if you're not positioned for the upcoming quantitative easing, if you're not positioned, if your products and services and offers are not positioned and well tested and well thought out, and if your funnels are not ready and optimized, well, I don't know what to tell you. You know, you should be working on that right now. If you have a corner of the market where customers know you, like you, trust you, but not because of anything outside of self-interest, because let's face it, everyone, including trillion-dollar giants, is in it for themselves, and so are your customers. If your customers are not really feeling it, if they're not feeling like, they don't feel like your products and services cater to their self-interest, then you are already toast. You're not going to be able to take advantage of the upcoming cycle of money printing, which, you know, happens all the time, but every cycle is a good one to capitalize on, don't you think? So that brings us to the end of this segment. In the next segment, I'm going to talk about the top mistakes I've made over the last few years. This is an interesting one. Why? Because I've made these mistakes recurrently. I have observed that I keep making these mistakes even to this date to a great extent. And that's just sad. I know what these mistakes are. I've identified what these mistakes can be and how to actually avoid making them, and I'm still making them. Well, in a lot of ways, I've stopped making them, and I've identified a framework to avoid making them. So I'm getting better. But I also observe almost all my clients making these same mistakes. My friends, absolutely. My family, yes. I observe almost everyone else also falling into one of these 5 traps. So we're going to talk about the top 5 mistakes that I have made over the years. And let's get started about those. Here are the top 5 mistakes. Well, the first one is not believing in my ideas. Not believing in my ideas. Now, did I actually confidently start most of my businesses? Yes. Did I confidently execute in the beginning? Yes. So what do I mean by not believing? I mean, I did not believe in my ideas long enough. Why? Well, we always have well-wishers, right? I had well-wishers who were smart, very smart, smarter than me, who told me why any idea that I had would likely be a bad idea and why I was liable to fail at it. In the first segment, we talked about macro. Macro is fun to watch. Macro is fun to analyze. But what moves the needle in your business is not making the same mistakes that I'm making right now, or I was making in the past. Learn from my mistakes. I'm trying to learn from my own mistakes, and I'm sharing this with you so you also learn from my mistakes so you can move the needle in your business. I did not believe in my idea because friends said, oh, that's saturated. Oh, that's just stupid. Do you know how stupid you sound? I didn't believe in them long enough for them to materialize. So I would start something, give it everything I've got for a few months, and then when it eventually did not turn out the way I had projected, hundreds of millions of dollars of revenues, bro. Do we do that? Do you do that? I do that all the time. 100 million should be easy. $1 billion incoming. Do you do that? I do that all the time. And so when you say those things and then those things don't happen within a few months, which, let's face it, they're never going to happen. They were never going to happen. There was no chance that could have happened. what happens is you have this Dunning-Kruger effect where eventually in the beginning you feel like a genius, right? This is time. I'm sure you've seen this, so you know what this is, right? Confidence. In the beginning, you have this confidence, this enormous surge of confidence, and you also have something known as beginner's luck, which we tend to have, which gives us or drives this initial confidence. Most of us get started with anything at all because we have a stroke of initial luck. When you're playing the piano and you play Twinkle, Twinkle, Little Star on it, right, melodically, and everyone claps for you, even though they know this is just the beginning, but they're just trying to encourage you. You're like, yeah, this seems easy, man. Da, 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 da. Easy. I can do it. And then comes the valley of doubt. How about fur release, bro? How about that Moonlight Sonata? You run into your first set of obstacles. And that's where all your wise detractors come back in. They're like, you see, this is harder than you thought. They are right. You did not know how hard it was going to be. And this is where most of us give up. I gave up too. You know what I used to do? I used to have these dry spells of, let's say, wins, okay? It's the winner effect. When you're having wins, you feel confident, you try to do more things. But when you stop having those wins, which is inevitable when you start something new, this valley of doubt, this is inevitable. You cannot escape it. This is inescapable. This right here, inescapable, no matter what you do. In fact, if you're going through this valley of doubt, that just means you're on the right path, and I did not know this. I did not know that when you feel things are way too hard, you're actually supposed to feel that way. You're actually supposed to persist. In fact, every success I've had has been when something pushed me through this valley of doubt. In a lot of cases, I gave up when I could have actually succeeded far beyond your wildest dreams. You start a YouTube channel, for instance, right? And you've been doing this for 2 months and you got 6 viewers. Is it easy to feel underconfident, like you failed? Like you can never get those millions of views, like you can never get those speaking gigs? Yes, it's easy to feel that. Why? This dry spell in the beginning, at the start, right after you start, is inevitable. You don't even know what you don't know. You don't even know why you are suffering. You don't know the intricacies of that business, no matter what it is, whether you're learning to play an instrument or learning to study something or going into business for yourself or with a partner. You don't know what you don't know. You're so unaware. And so this phase is where you build up that competence, but your confidence does not compound yet. Why? Because you're not having those wins. Those wins need certain factors to be aligned, certain ducks to be lined up, and lining up those ducks takes time. My big mistake, greatest mistake, was I quit right within this phase, right at the bottom of the Dunning-Kruger valley, because of something someone else said, because I was having a crisis of faith, because the pain itself that I was experiencing told me that maybe I shouldn't be doing this. Maybe this is harder than I thought, which is right. It's harder than you think. The obstacles are always going to be there. No matter what you do, you're always going to have obstacles. But here's my new rule. Decide your runway before you start, okay? I'll give you an example. If you want to learn piano, if you're going to commit to learning piano, commit to learning it for 2 years, 1 hour a day, with a dedicated program, whether it's online or with a physical teacher. Fortunately, now you can do it online with something like Rolly Play or Rolly Learn, no affiliation, right? You can just learn with their program, and there's like a bunch of programs that you can take. Commit to learning it for 1 hour a day for 2 years straight. If you can still not feel it, if you still feel that this confidence is not building up, if you still feel like this will never work out for you, then give up. But your hypothesis testing has got to have enough of a runway. Give yourself enough of a runway before deciding this did not work for you. I used to believe quite fallaciously that I was actually reacting to feedback. The feedback I was receiving was that you cannot win, Well, that's because the ducks, these are the ducks, okay? These ducks hadn't been lined up. That takes some time, no matter the field. So eventually you start building your confidence where this thing plateaus eventually. This is where you tend to approach mastery. If you want to get there, understand right at the onset that you're going to have this valley of doubt no matter what you try, and just jumping ship or changing your industry or trying something else is not going to solve this problem. You're going to have the same valley of doubt no matter what you do. So instead, you have to understand that you have to have a runway long enough to be able to tough it out right here. That was my biggest mistake for a long time. Moving on, mistake number 2, and you're gonna see some patterns here, okay? Work hard, not right. You know how big a proponent I am of 80-20, right? Here's why I became a proponent of 80-20. I was working so hard. I've worked so hard for 2 decades, well over 2 decades now. I just didn't do the 80-20 things. 80-20 means, most people don't understand the interpretation of 80-20. So let me lay it out for you again, even though I've done this before. 80-20 means you have 4x leverage on your effort. But you can go squared on both sides. So that means 64% comes from 4%. That's a 16x leverage on your time, on your effort. You can go cubed on that, and then you have 51.2% on one side and 0.8% on the other side. Let me say that for you clearly enough so that you understand. That's a 64x leverage, or more than half your results are going to come from less than 1% of your effort. Here's the thing though, it has to be the right effort. You have to make the right effort. You have to do the right things that actually move the needle. Here's what I did. I did busy work. I became a busybody. I built funnels in corporation in Delaware and rented WeWork offices and setting up phone lines and interactive voice response systems and automations and all of that before doing the main thing. The one thing that I should have been doing. And that one thing obviously varies, but here's how you know what your one thing is. It's what keeps you up at night. It's what makes you uncomfortable. That's your actual lever. That's what's actually going to move the needle for you. You already know what it is. You know the thing that you're trying to avoid doing right now. Can be in any field. Can even be in dating. If you avoid approaching girls, bro, you know that's your problem. If you avoid doing the one thing that you know is holding you back, that one thing that makes you uncomfortable, it makes you just not very happy, okay? Keeps you up at night. What is it that keeps you up at night? If you're a business owner contemplating an ad campaign, here's your one thing, that ad campaign. Don't contemplate. Don't justify it. Don't discuss with Claude. Go run it right now. That's your one thing. Run your one thing right now. You know what it is. That was the mistake I kept making. You can have a 64x leverage right here. This 64x leverage, that's your one thing. That's your one thing. The one thing that moves the needle is that thing that keeps you up at night. Here's the problem with it. You solve it mentally. At least that's what I used to do. Chat. This is the new thing. And I fell into this for a couple of months. Chat with ChatGPT, okay? Chat with ChatGPT. Why do you think it's going to work? Oh, but have you thought about this? Oh, have you thought about that? Spending hours doing that. And mentally, in my mind, I've solved that problem. But in the real world, has that problem been solved? No. In the mind, you have this win, right? You have this win that I'm doing so much work, I'm working so hard, I'm working on all these things for 12, 14, 16 hours a day, right? I'm doing all this. 16 hours a day, I'm doing this. And yet, I'm not winning. Why? If you feel stuck, you know for a fact that there's an obstacle that you need to tackle right now. That's the one thing in your business right now. That's the one thing in your life right now. You need to tackle that today. And I'm saying this to myself, to my kids, to everyone who is dear to me. I'm saying it to everyone. I'm saying it to myself. You got to do that thing right now. The thing that you're actually afraid of. That ad campaign that you're not running, you should have been running it last week. That supplier you're not calling, you should have called him last week. That girl you're not hitting on, you should have hit on her last week. You would have honest feedback. At the very least, you might even achieve success someday. You might actually crack the code someday. But you already know what your obstacle is. Ryan Holiday wrote one of the greatest books of our lives. It's called The Obstacle is the Way. It literally gives you everything in the title. You know what your obstacle is. Don't solve it mentally. Solve it in the real world. Why? Because there are second order obstacles. When you solve a problem, even successfully, now you have a new set of obstacles, a new set of challenges to solve. These obstacles are always your path. They are your way. Solving them mentally means you don't see what these obstacles are. Every time you solve a problem, there's going to be a new one. And that's the one thing to solve. You already know what your one thing is. I always knew what my one thing is. And instead of doing that, I did busy work, 12 hours a day, 14, 16 hours a day. Everyone's like, Behl's working so hard. He's got such a great work ethic. No, bro. Work ethic in my understanding as it is today, after decades of failure and success, mixed results, right? It's simply being able to do the things that actually move the needle. Things that make you uncomfortable. They're often one and the same thing. There's obviously something that's keeping you up at night. There's obviously something you're stressed about. And the way through that stress, the way to resolve that stress, even for your mental health, is to just go through that problem right now. Address that problem right now. Third biggest mistake. I kept deferring fun. I was so busy doing the busy work that I said, I'll do it later. After X has been achieved, after I've sold a company, I'll start playing the piano regularly 1 hour a day as soon as I've sold my company. Did a couple of exits, kept moving the line. This is a line in the sand problem. Okay? You draw a line in the sand, then you move the goalpost. Here's the thing. Life's not waiting for you. Here I am, couple decades later. I look old, I got all this gray, never had fun. I mean, I had fun, but not the way I should have. I should have allocated time for it. It's not just fun. Things I wanted to do, like I keep coming back to piano because that was my thing. I wanted to become an elite pianist, right? I never took that sabbatical. I never even took the 2 hours a day or 1 hour a day. And if I had actually done that, financially, I might have been no worse. I might actually have been better. But I didn't do that. Here's something else I did. I deferred payments to myself. I negotiated against myself in my own company. I said, I'll take the big raise after so-and-so milestone has been reached. And milestones were reached. Some of them were not. Sometimes strategy evolved. Sometimes things changed. Everything kept happening. I just kept negotiating against myself, whether it came to fun, whether it came to payments, whether it came to building equity in any way, shape, or form. For the longest time, I deferred everything to a certain imaginary point in the future, which came and went many times. In many other cases, it never even came. Here we are. I'll never be the 19-year-old with a Lambo anymore. This brings me to an example of this guy on Twitter, right? He talks about, I'm 19 years old, I achieved success, I bought my first Lambo. And every one of the wise detractors on Twitter, on X, goes crazy on him. They're telling him, you can imagine what they're telling him, right? They're telling him, oh, you could have put that money in SPX. Oh, you could have put that money somewhere else in the bonds. Imagine what your life would be like at 30 years old. At 40 years old, you'd be retired at 40. Well, how many of those people actually had a Lambo at 19? I'm not saying it's a great decision financially. I'm just saying There's more to life than just work and finance. And coming from me, it sounds hypocritical. I just work all day long. But I wish I'd learned this lesson sooner. I'm never going to be the 24-year-old with a Lambo or a Ferrari. I can buy a Ferrari today. What's the point? I don't even feel excited about it. I'm okay with my regular car. You know? Regular SUV. Moves fast. It's a V8. It's good. You know? It's good. I don't need anything else. I really felt it in my bones when I was 22. I want to have this Ferrari. I want to have this Lambo. I want to have the supercar experience. And I didn't. So I deferred fun. I deferred having fun. For what? For coming to a point in my life where it doesn't even matter anymore. That's what I deferred it for. I deferred all this equity. I'm going to become a master pianist. First, I got to be smart. Build a multi-million-dollar portfolio though, right? Then we'll do that. Here's the thing. I could die right now. I won't take that sabbatical after I'm dead, am I? Gonna? No. I won't play the piano after I'm dead. Hopefully I'm not going to be a ghost that plays the piano. I never paid myself what founders with no money whatsoever, with seed funding, took home. I negotiated against myself. I should have negotiated with the board from the very first day that I deserved this based on market rates and a bonus linked to the performance. That's what I should have done. But I looked at these big guys. Oh, he took a $1 salary, bro. He said, I'm going to take my salary in equity. Well, here's the thing. You got bills to pay today. You're getting older every day. So that's my big mistake. Deferred gratification is just as bad as deferred work. It's just sophisticated avoidance. It's basically the other side, the flip side to the coin, which is procrastination, which we were just talking about, doing the busy work. It's the same thing. Yes, you should delay gratification to a certain extent, with the caveat that you're never going to get younger ever again. Today, if you're watching this stream, you're older than you were before you started watching this stream. You're never going to get your life back. Point number 4, big mistake, trust. I know people hate this when I say that. Here's what happened. I gave $70,000 worth of unsecured credit to a friend, a great friend. We've known each other for a decade, through thick and thin. You know what happened? He never repaid. I lost the friendship, I lost the money. Is he a bad person? No, he's not. Even today, I know he's not a bad person. It's just that the incentives did not line up. Loyalty and doing the right thing became so expensive compared to just keeping the money. I really have no one else to blame but myself. Someone tells me I got this medical condition and I'm sympathetic. I want to support this person financially. I do it. Good thing. I'm a great friend, aren't I? Yeah, I am. Here's the problem with that. I never saw a shred of evidence. No medical reports, no meetings with the doctor, nothing that actually verified his claims. Who's the loser now? The guy who continues to trust blindly for years. Here's the thing with trust. All of us are very skeptical of outsiders, of strangers. Yeah? Or adversaries. Are we skeptical enough of insiders? All my betrayals came from people who were close to me. None of the betrayals came from people who I was obviously vigilant against. I was sharp, I was vigilant, I was always watching out for all the outsiders, not for the insiders. Insiders can always break you. Here's the thing I should have done. Trust, but verify. These are the two things you have to absolutely do. If you want to keep the friendship, if you want to keep the relationship, you have to trust but verify, and never let incentives align against you. Guess what? The best people in the world are still in it for number one. Everyone is in it for themselves. If the incentives for betraying you are sufficiently large, the nicest people in the world, the most trustworthy people in the world will betray you. Now, it's not just about money. Some people don't value money as much as other things, but there's always some sort of an incentive structure that lets them justify walking away. And that happens every single day. I know this is not the comfortable truth that you're looking for. I let someone that I acquired a business from run the business, which we had agreed to. Here's the problem though. I was trusting him on the P&L for a while. It only took a few months, and he started giving me, reports that I should have verified. Let's just put it like that. I should have verified. I should have had financial control from the day I handed him the very first check. Trusting people too much, people whom you like, people whom you trust, those are the people who, look, someone you don't trust cannot violate your trust. People who you trust are the only ones who are even in the position to be able to violate your trust, aren't they? Trust but verify. Verify everything. You're not disrespecting anyone by verifying anything. If you're trusting someone with something, if you have a contractual obligation to someone and then they also have a counter obligation to you, make sure that you are verifying that they are holding up their end of the bargain. Because when they don't, eventually you'll have no one else to blame but yourself. What gets inspected gets respected. Goes always. With your employees, with your customers, with your suppliers, in business, with your business partners, in life, with your spouse, your siblings, your parents, people closest to you. Nobody minds when a father says to his son, I need to see your report card. It's not admission of a lack of trust. If you go to your son and say, I need to see your report card, you're not saying, I don't trust you. I don't trust you on what you're telling me your grades are. You're just saying, I need to see it. That's it. That's all there is to it. Whatever gets inspected gets respected. If you cannot inspect something, then any obligation someone else has to you with respect to that particular aspect which you're not privy to, you don't really have that. You're lining yourself up for betrayal, for lack of respect. That was one of my big, huge mistakes. Trust but verify, especially with insiders. I cannot stress this enough. Your insiders are the ones who are in a position to betray you. You don't trust an outsider, do you? You always verify everything with the outsiders. It's the insiders that you don't trust, that you do trust, that you trust with your own life, that have this leverage over you where they can actually betray you. Outsiders can't. That's the part people don't understand. I didn't understand for the longest time. And finally, mule work. I came up with this principle for myself a couple of years ago because I was depleting or downregulating my dopamine just by reading books. People talk about dopamine all the time. They're like, don't play the games. Yeah, seems easy enough. Don't watch YouTube videos all day long. Yeah, seems easy enough. Do the things that you're supposed to do. Yep, I can do that. Nobody warns you against books. I'll give you an example. I used to have this period where I used to wake up, and one of my ritual habits for every single day was to read something for like 3 hours a day. I was going through 2 or 3 books a week. Made me feel great, very knowledgeable about business, about life, fiction, history, everything, right? I know all this stuff. I'm this genius who knows everything. Well, here's the genius part of it. After 3 hours of reading a book, 3 to 4 hours of reading a book, I'm so depleted, not on the energy levels, on dopamine levels, that now I don't have the motivation to actually work. Read a book on business, made those mental models about how I'm going to achieve those things that I've set out to achieve. But I don't have the motivation. Why? My dopamine is down the drain. I used to spend 2 hours in the shower just thinking about these business problems and personal problems and optimization, and I'm gonna do this, bro, and I'm gonna do that, bro. Do you ever do that? Go into the shower, stand there just thinking about stuff, and 2 hours later I come out of there, I'm so depleted. My energy is okay, it's fine, I haven't eaten anything, I'm feeling energetic, I just don't want to work. Here's the thing, thinking about working feels like work. Let me say that again. Thinking about working feels like work. Planning out your day feels like actual execution. Your mind does not know. Your dopamine receptors are fried. They get fried. Your mind does not know the difference. Do you understand, bro? Your mind does not know that you're just scribbling notes on a piece of paper instead of actually building a business. Your mind does not know you're watching someone else approach that girl on a YouTube video instead of actually doing that yourself. Your mind does not know the difference. You're thinking about these grand plans, these grand problem solving situations, this obstacle avoidance course or whatever, right? And you feel productive. You feel like you've done so much. Oh, I did the planning. Now all that's left is execution. Here's the thing, bro. Ideas are a dime a dozen. Anybody can come up with an idea. Everybody has a whole fuck ton of ideas. It's not where the money is. It's not where success is, no matter how you think about it. I used to watch piano lessons on YouTube, lessons about music theory, and I learned, absolutely learned. I wasn't practicing though. Wasn't getting actually good at it though. The only way to get good at piano, you know this, is actually practicing the piano. The only way to build a business is actually sitting down and doing what I call mule work. That's your 90% of success right there. Just like a mule, you sit down, you get it done. You put your head down, you get it done. 10%, yes, absolutely. Plan. Look at feedback, course correct. Yeah? This is course correction in my handwriting. So make of it what you will. 90% of it is just absolute. Put your head down and get things done. If you've planned it out, now it's time to actually get things done. Because your mind does not know the difference. If you're thinking about something, your mind thinks you're actually being productive. And you're just down-regulating your own dopamine in that process. Those are the 5 big mistakes I constantly made. And you know, I optimized for the feeling of doing the right thing instead of actually just doing the right thing. So you get the emotional paycheck just thinking about it. And then wasting your time not actually handling the real obstacle that you have right now, instead of just, instead you just sit there, do the busy work, and waste your time doing the busy work. So you get the emotional paycheck, but you don't really get zero currency, zero money or zero skills or zero success that you're looking for. So that brings us to the final section of today's stream. We're going to talk about the current framework. Here's what I want you to know, and I should probably write this down. And the notebook, we are all out of it. I'm still going to write it down. Only do the uncomfortable high value work. If it doesn't make you uncomfortable, is it even real work? Is it even real work if it doesn't make you uncomfortable? only ever do the uncomfortable high value work. If you're going to do 3 things today, then let those 3 things be the uncomfortable obstacles that you've been trying to work around, weasel your way around. That's my current framework right now. You cannot 10x your hours. You understand that, right? You cannot 100x your hours. Even if you're working 12 hours a day, it doesn't matter. If you're stuck, then you're avoiding the uncomfortable high value work. That's why you're stuck. You can 100x your output by solving this obstacle, and then the next set of obstacles that appears or arrives as a downstream effect of solving the current obstacles. Here's the other thing too. When you look at initial valley of doubt thing that we talked about here, right? The very first big mistake that I keep making or kept making for a while. When you talk about this inescapable valley of doubt where you don't have success, well, that's not feedback to go on. Here's the problem with that. It looks like feedback, right? And I always talk about making hypotheses, testing them cheaply. Here's the problem with that approach. There's no problem with that approach. That approach is absolutely perfect. Here's how we implement it incorrectly. We receive feedback on the wrong grounds. Our assumptions are wrong. If you have the wrong assumptions, okay, let's talk about assumptions here. Let's say you are a drop shipping business, okay, and you're like, I'm gonna validate whether this product works or not. Well, here's the thing, bro, you don't need to validate it. It's already pre-validated for you. Why? Because others are selling similar products right now in your industry. Right now there's demand. So if you're validating demand, which you clearly see that it exists, that is a false assumption right there. You don't need to validate it. Do you need to validate if people buy t-shirts? Come on, bro. Do you need to validate if people buy whatever it is that you sell? That's not the thing to test. Every shot you take is a hypothesis you're testing, and you have to make sure your assumptions are true or correct. You have to make sure you're testing the right thing. If you start a YouTube channel, for instance, on an average it takes, I read somewhere in a study, it takes like 2 years to get successful with a YouTube channel. 2 years to achieve success. If you've been doing it for 2 months, then you haven't given it enough of a runway to succeed. And what's the assumption you're testing there? Does it work? Well, for that assumption to even be tested, does it work for me? You have to give it sufficient time. You absolutely have to give it sufficient time, or else you don't know what you're testing. At the same time, the other thing is you have to give it the right amount of energy or effort or attention or resources for it to generate a real signal for you. And finally, you only need to work on the uncomfortable things today, every single day. If you keep pushing that comfort zone, pushing yourself out of your comfort zone, what happens is your comfort zone expands and your zone of competence also simultaneously expands with it. People talk about this gut feeling, this intuition, that this guy has such great gut feeling. Well, how do you get that intuition? By getting a lot of experience, by making a lot of mistakes. As long as you can make a mistake and still remain standing, keep enough dry powder, never bet the farm, right? Well, if you can do that, sooner or later, you begin to develop this real competence according to the Dunning-Kruger effect, right? You achieve this state right here. This is where you want to go. Mastery, which is synonymous with intuition. You can rely on your intuition, but when you are in this phase, not here. You don't have an intuition you haven't cultivated. You don't have enough frames of reference to be able to cultivate that intuition. So that brings us to the end of today's stream. And yeah, today it was very exciting for me because we keep talking about how to test hypotheses in our live streams. But no business is an island unto itself. What we do know for sure is that eventually money printer will go brrr again, which means more inflation. Things are going to get more expensive, by the way. You have to come to terms with the idea that things will get expensive. There's just no way around it. And if you want to delude yourself into believing that's not going to happen, or that it shouldn't happen. Look, world works how it works, not the way it ought to. Okay? Not the way it should, not the way you think it should, not the way anyone thinks it should. The world works the way it works, and the way it works is political solution is always going to be print more money. Your business is stuck because you're avoiding the main thing that you should be doing. Here's what I used to say to everyone: work hard. Here's what I say to everyone: fight hard. You're okay spending 2, 3, 4 hours a day on your business. In fact, some of the most successful people in the world, they really only work for 2, 3, 4 hours a day, but they do it consistently. Years, decades, and they achieve massive success. People often overestimate what we can achieve in a year, but we grossly underestimate what we can achieve in a decade. So that brings me to the end of today's stream. My name is Behl. This is Behl's Business Broadcasting. If you enjoyed today's stream, be sure to subscribe. And if you have comments or questions that you would like me to address, leave them in the comment section below. I'll see you in the next one. Have a great day ahead.